Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. Yes, it's been around 2 weeks since I last did an episode, and the stock did go up quite a lot. Well, the whole stock market did go up, but let's touch on what has gone well with Tesla and what has gone wrong. Because despite the stock being up quite significantly since the start of April, well, if we actually look at the data out of Europe and the data out of China, things aren't looking that rosy. So why exactly is the stock up? Well, on the one side, of course, there is the anticipation of the robotaxi launch in Austin in June. Second of all, you have, as you can see on the screen, well, you have more and more videos of Tesla outside of the United States with full self-driving, whether it's in Australia or in Europe. So maybe the market is now paying, well, happily paying a premium for the non-car side of the business, but for the tech side of the business. We've had also videos of the Optimus robot. We've seen Elon in the Middle East, in Saudi Arabia, talking about autonomous vehicles, Optimus robot. So maybe right now we are back where, well, basically we started the year, which was the attention is towards the tech side of the business, the energy side of the business, the robotics side of the business. And then, of course, well, you know exactly what has happened. And so the stock went down even further. But right now, it does seem like we are rebounding quite heavily. Of course, on Friday after the market closed, we've had that Moody's downgrade. So the whole market went down 8% or so Friday after the market closes, but more on that in tomorrow's portfolio review video. In this one, I purely want to focus on Tesla stock, some data out of China and Europe as well. So stick around for that. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so as you can see, since the start of April, Tesla stock is actually up close to 50%, now at $340 with the after hours action. Market cap, again, over $1 trillion. And so, of course, if we look at the traditional metrics here, trailing 12 months PE of 196 times, the forward one at 161 times. Margin-wise, it takes the last 4 quarters. We know that margins have also taken a hit, but gross margin still 17.7%, EBITDA margin is 13.1%, operating margin is 7.3%, free cash flow margin at 7.1% here as well. Looking at growth, forward-looking 2 years, 10.3%, EPS 9.7%. So again, the current expectations are that, well, this is not really a high growth stock, a high growth business. But of course, there are a lot of unknowns. There's a lot of anticipation, but there's a lot of unknowns as to how much growth this will bring to the business in the next, let's say, 2-3 quarters or so, right? The autonomous vehicle side of things, robotics, all of that will take time until we actually see a very, very big impact on Tesla's top and bottom lines. Now, of course, with the tariffs, the fact that right now between the United States and China, there is that 90-day pause. So Tesla, which was impacted by the tariffs as well, maybe not as much as the competition, it was still impacted by those tariffs, especially the Cybercab and the Tesla Semi. Now with the 90-day pause, they will again, let's say, benefit from a more normal situation. Switching to the Tesla weekly insured number in China. So the week that I did not make a video was this number right here, 7,300, which was less than the 10,300 we've had the week before that. And of course, way less than the 11,000 same week a year ago. And it gets worse because the previous week, right now, 3,070 vehicles, which is less than the 7,300 and way less than the 9,800. So for the quarter, we're currently at 36,470, which is, well, around 10,000 vehicles less than the same period last year. Last year, we were already at 48,887. My question here is, of course, that's with the Model Y refresh. My question here is, what has happened, right? We started slow, but we've made our way back up. We actually ended last quarter pretty strong, right? As we've seen right here. But what has happened now? Is there such a lack of demand? Is there a production issue? what is going on in China. Now you're going to say, oh, it's about exports. Well, no, exports are at the start. So that's why we've seen this slow ramp at the start of the quarter. Right now, what we should have seen is this number increase, which we've not. So here again, we've got some questions. Maybe something has happened on the production line. Maybe they're retooling it for, well, the next gen vehicle, although I'd be surprised if that's the case because that should have been done already. So yeah, a question mark because the Model Y refresh was an excuse that we could have used in Q1, right? As bulls, we used it in Q1. In Q2, I mean, the refresh is over. So there should have been enough demand, unless there isn't. As for the production and wholesale number for the month of April, we've got 61,995 production numbers, wholesale 58,459, which is a split between 28,731 retail and just a little bit above that right here, 29,728 for exports. This sheet is available to all channel members. And if you don't want to become a channel member, that's fine. You'll just have to wait for the weekly reviews. And so here as well, if we purely focus on the car side of Tesla's business right now, there are some question marks, right? I'm bullish on the business, I'm bullish on the stock, but I have questions and that's fine to ask. If you know the answer, maybe someone already answered that, what has happened in China in the last couple of weeks, do let me know down in the comment section below. Moving on to the select European countries, UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland. Year to date, we're down 26.7%. In the last couple of weeks, well, we did go up a little bit. For the last week, that was 1,700. Previously, we were at 1,400, 1,100, and 900. So yeah, we are making our way back up, but we are still far away from where we should be. And I do believe that in the UK, which has become, I believe, Tesla's biggest market right now, in the UK, we are still waiting for the Model Y, well, the newer version of the Model Y, for that to really pick up. Now, is this a problem with Tesla specifically, or is this a problem for EVs as a whole? Well, in the United States, sales of EVs fell by around 5% during the month of April, while the broader car market grew by 10%. Monthly EV sales in the United States have only declined 3 times since 2021. The declines were across most brands, from Kia and Hyundai to Ford. Tesla, which has accounted for around half of EV sales in the United States, reported that sales dropped nearly 13%. Sales of Rivian's R1T pickup and R1S SUV declined by half. So, in the United States specifically, clearly there is now a lack of demand for EVs, but not a lack of demand for cars. So I would again say this might be another pricing issue / probably misinformation still about EVs. But if we look at other markets, Europe and China, for example, well, there's another story there. The number of electric vehicles sold came to 1.5 million in April, a drop of 12% compared to March 2025. In the period from January to April, meanwhile, there were 5.6 million EVs sold worldwide, representing a year-on-year jump of 29%. Ongoing tariff negotiations are dominating talk in the electric vehicle industry, but quietly, domestic manufacturers in China and the EU continue to perform well and grow market share. The EU is certainly the success story for EV sales in 2025 so far, with emissions targets lighting a fire under the industry to accelerate the switch to electric. From January to April, sales in Europe were up 25% on the year. China saw a 35% rise. North America saw a 5% rise, while the rest of the world saw a 37% rise. In April alone, Europe saw growth of 35%, China 32%, while sales fell 5.6% in North America, and the rest of the world, April sales rose 51%. So I do guess that in some parts of the world, there is definitely some demand for EVs. My guess here is that, well, pricing matters. Yes, in Europe, for sure, there is some brand damage when it comes to Tesla. Chinese one coming in probably with cheaper models as well. The question here is, with, of course, the big difference today than a year, 2 years, 3 years ago is that today, well, we have way less incentives across the board in a lot of European countries. And in the United States, well, talks around that incentives for EVs, well, we still don't know when that will disappear or if that will disappear anytime soon. So yeah, I guess a story here of two faces: demand, no demand, specific demand in some countries. And I guess, again, to me, the biggest issue is that, well, it still is quite expensive. And maybe, yes, maybe demand for Tesla specifically are not what they used to be. Maybe we've reached a peak demand, maybe. But we do know that a month from now, we're going to get the newer, more affordable models. And that's hopefully a thing that fixes the problem on the affordability side of things. Now, the looks of it, the size of the vehicles, we don't know. I mean, most of us still think that this is going to be a stripped down version of a Model Y. So how much cheaper can that be, especially for a European market, remains to be seen. Hopefully, I mean, to me, it makes sense to sell it at break even and then upsell FSD, and that's how you make up your margins. But we'll see what happens. We then have an unusual amount of information that came from the, well, investor relations from Tesla when they talked with some analysts, some Wall Street analysts. So on Optimus, Tesla wants to offer investors tours of low-scale manufacturing by Q4 2025. Hopefully there is going to be an event. Tesla is on track to launch its robotaxi service in Austin. Initial fleet of 10 to 12 cars will be invite only at first. Tesla is building a production line to enable 1,000 per month Optimus production, but that is still many months away. The second gen line is targeting 10K a month, the third line 10x the second line. Tesla wants to build thousands of Optimus robots by the end of this year. Neural nets for Optimus are far larger than the ones for their cars. Makes sense. Tesla Dojo comes out in 2026, will be more efficient than Dojo 1 and cheaper than comparable NVIDIA solutions. Now, comparable NVIDIA solutions, we don't know which NVIDIA solution that is going to be. It's not expected to be one for one as a competitive to NVIDIA. Dojo 3 is expected to come out in 2028. The company thinks it can narrow the performance gap for application-specific integrated circuits, or ASICs. Tesla believes that 10xing their computer and acquiring much cheaper chips could result in a major unlock. And I know, we've talked about Dojo in the past, then it was completely forgotten, didn't really get that much attention from Tesla, because let's be honest, if they think they can spend their resources elsewhere and just buy from NVIDIA, then they'll do that. But if they think that there is a chance that they might get it for cheaper and the performance might be on par and maybe even better in the future than NVIDIA, then I guess they'll focus on that if that's necessary. I just noticed that I aligned myself perfectly with the Optimus robot right here. And so, to repeat the words from Elon Musk, if you are investing in Tesla, you have no choice but to believe in the autonomous future and probably the robotics future as well. If you do not believe in those two parts, there is zero reasons for you to hold Tesla shares, especially at today's prices, which again, I'll admit, and I've admitted that at the start of the year as well. And remember, back then the stock was even higher, above $400. The stock had no business trading at those valuations based on the, well, financials that the company was reporting. But of course, if we're looking 5 years out, 10 years out, and there are millions of autonomous vehicles driving around the globe, generating revenue for Tesla, probably tens of thousands, hundreds of thousands of Optimus robots around the world as well, maybe a million 10 years from now. Who knows? That generates quite a lot of money for Tesla, revenue and profits. And then, then maybe it might make sense to hold it at over $1 trillion. Me, I have no intentions of getting rid of my positions. As we've discussed, and as you've probably seen, some retail on YouTube have already sold their Tesla shares. I mean, a month before the launch of Robotaxi in Austin, selling your shares is a bit strange. But then again, don't forget that the launch in Austin is going to be super small and will have zero impact on Tesla's financials right now or even in the next couple of quarters. So all in all, that's about it. The numbers don't look great. The price of the stock did go up. There is a lot of momentum now with the stock and just the whole stock market as well. But for Tesla specifically, it does seem like Wall Street is paying now way more attention to, and that's not pun intended, way more, to the robotaxi side of the business or the robotics side of the business. So all in all, that's about it. Do share your thoughts and comments down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye bye.